All right, so we're recording now. Just want to say hi to Coco before Coco goes away. Hi,
Coco,
Coco.
say hi. You can look at that camera. Yeah, you can look. Okay.
We love you, Coco, but you're too loud. Coco wanted to be a part of the live stream, but
Coco's really good at saying okay. I am back.
all right, we're back. All right, so first off, this will be really fun. We're going to be today will be fun. We're live streaming this. We're going to be speaking with some incredible folks from Lightspark, Mento Labs, Dynamic, Borderless, and then Loop Crypto. So we have a really exciting session for those who are watching. We saw this report come out last week, our team, and we were just like, this is incredible. We love when people take the time and effort to put quality and attention and depth of focus into what's really exciting going on with stablecoins. So just we're excited to dive into this and collaborate on this session with you. I think it would make sense to start here with just your intro and why you guys decided to do
Yep.
this report in the first place.
Sounds great. So maybe I'll give a very quick about me, then about Dynamic, and then to your point, why we actually put this together. But very quickly, for those that don't know, I'm Itai. I'm one of the co-founders and CEO of Dynamic. We've been at this for about 4 years. Today, we have customers like Stripe and Kraken, Zero Hash, and Magic Eden, and Ondo Finance, and Maple, and a bunch of and Loop Crypto, and a bunch of folks that we are very fortunate to work very closely with. Really, what Dynamic does in a nutshell, just so everyone knows, is we're really a wallet infrastructure company. Right? The vision of Dynamic, and it ties to the report, is that if you open your phone in 5 years, every app on your phone is likely going to have a crypto component. That's how money is going to move around. Therefore, every app on your phone is going to have a wallet component. And that's where Dynamic comes in. So we do both embedded wallets. We let you connect external wallets for pay-in type functionality. And that's where Dynamic plays. And specifically, this report is, we have found that I spend probably 80% of my time talking to fintech companies outside crypto, not to crypto companies. And where that time is spent is essentially chatting about how to do global pay-ins, payouts, how to move money. And what we realized very quickly is that folks want to leverage crypto rails, but it's really, really hard. It's still not where it needs to be. And so we said, look, we gotta spend time, and we've found ourselves spending time with product teams and engineering teams just to educate them as to how to build with crypto in a way that doesn't take a lot of their time. And the output of that is the Stablecoin Playbook, right? It's how do you actually approach this? And that's where we're spending our time. You'll probably see a version 2 of this. You'll probably see some changes in our docs as a result. But that's kind of that is the reasoning for why we put this together, is really to say, look, the next set of developers and the next set of folks thinking about this stuff are not going to be crypto native. And we as a community of crypto native companies have to do a better job of kind of educating folks about the power of this.
Yeah, we are extremely passionate about partnering with you guys in that. I think there's a huge gap. We call it the navigation problem at our business. There's just a huge gap of commercial interest right now, and all these companies that are wanting to get involved with stablecoins and everything they do. But there's this huge divide between the possibilities of infrastructure and what's out there as like recipes or Lego blocks,
right,
to actually what you need to, how you need to fit these things and stitch these things together. You guys are in a really interesting vantage point as a wallet company or an accounts company. I know you guys do so many things, but you are often in this position of stitching a lot of these pieces together. So it makes a ton of sense to me why you would be wanting to come out with a report like this. I'm sure it'll also help you guys from a internal resourcing and scaling standpoint to give, hey, go check out this PDF. We love helping you build. We'll hop on a call, but go read this. This is a beefy report. This is 55 pages. And I'd love to just start, Itai, with you on the core takeaways from this report. You guys have a few of them, and
Right.
we can just kind of knock them off one by one, and kind of as we kick off this session, help
Yeah.
people start there. I'll read this, and then we'll tackle these one by one. So this report was created to help product builders, fintech teams, and developers understand how to navigate the stablecoin landscape. I love that word, with clarity and confidence. It breaks down the mechanics of stablecoins, the infrastructure required to use them, and the regulatory context shaping their future. Whether you're exploring payments, remittances, or neobank products, this guide offers practical insights to help you go from idea to launch. Incredible cohort of folks that you guys have brought together: Paxos, A16Z, Braille, Kiln, M0. The list is way too long here, and we'll be hearing from a handful of these folks today. So, Itai, we start with these key takeaways. Let's just kind of go by these one by one. We can spend a few minutes, if you would, on what these core takeaways are
Yeah.
in your own words, and speak a little bit more to this. So the first takeaway is stablecoins are no longer just for crypto native users. Speak a little bit to what you saw there.
Yeah, absolutely. So and first, by the way, to your previous point, we were fortunate, and I think what we found as we reached out to folks is this really resonates, right? And you can see on the list, you can see Web3 native companies, but you can also see companies who are super forward, kind of facing, innovation facing, like Ramp, right on that list, who are all thinking about this very actively and all saying, hey, let's put this thing together. But to your point, the main takeaway, and a very key takeaway, is that the use case is not for crypto native companies, meaning the idea, the goal for stable coins is to power global commerce. Excuse me, I woke up with a cold, so apologies. But um, um, the goal of stablecoins is to power global commerce. It's not to power crypto commerce, right? If we think about the next few years, I really hope we actually stop calling ourselves crypto companies and we're just next generation fintech companies. And that entail means that your next generation neobank, that's going to start not within a country, but rather going to start global first, will require these crypto rails to actually execute, right? If you're thinking about, a neobank or remittance app that starts in the US, if it wants to expand internationally, the quickest way to do that and the most efficient way to do that and the most cost efficient way to do that is actually crypto rails. And so the main takeaway, and the main kind of, thing people should take away from, should walk away from this is that we're not talking about how to implement crypto for the sake of implementing crypto. We're talking about, hey, there's a better rail here that can help you move global money, that can help you remit payments, that can help you remit vendor payments, can help you accept payments globally. That is the lens you should approach this with, whether you're a crypto company or not, right? That is a takeaway here, from this first main takeaway.
Yeah. When we think about the difference, I know Dynamic has been around. How many years has it been, Itai, that you guys have been around?
Almost 4 years, 3 years and 10 months, but who's counting?
Yeah. So
Yeah.
4 years you guys have been building, and you've seen this, what, in the last 6 to 12 months, this shift, like crypto native is sort of, but historically, like the tech itself and the rails that underpin a lot of this, that you guys have been innovating for that time. This isn't day one for you. You're 4 years in here.
That's right.
And the use cases, when I think about crypto native use cases, these are like focused on crypto, acquiring them, exchanging them. People who are wanting to involve themselves historically in the tech mostly have been people who care about crypto, people who want to acquire crypto assets because they want to speculate on them or get involved. Like, that's a super different ICP use case than, a family and an emerging market who wants global dollar access. So it is interesting to see the shift there, but okay.
You're right. By the way, on that point, what you realize is that even 4 years in, a lot of the assumptions we make, as dynamic, are no longer true. Meaning, to your point, the infrastructure is there, but when you build for a crypto native audience, you can very easily explain, look, you have to pay gas. Here's how you abstract away gas. You have to think about, okay, use a Veeam. That's how you do ETH calls, right? Like Web3.js connect, like on Solana, right? And all these kind of don't hold true when you're talking to a fintech engineer, right? As soon as you're like, wait, just think about 7702, EIP 7702 and gasless transactions, you have lost the plot, right? So even
Yeah, they're
for
gone.
us,
They're out the door.
yeah, they're like, okay, great. Like not, please come back to me when you're saying sane words, right? And so a lot of this actually was also learning for us, which is you really have to start from scratch as to, okay, who are the ICP, to your point, what do they know, what do they not know, what are they trying to build for, and optimize the product for that.
Yeah. So in terms of choosing wisely here. So the second point,
Yeah.
issuer, token design, the idea of starting from scratch, the underlying chain. We're seeing companies like Stripe come out and say that they're coming out with their own chain. Like this is very relevant right now. Talk a little bit about choosing the choices that these companies really have
Yeah.
at the bare bones.
Yeah, so companies have kind of a meaningful amount of choice in Lego blocks, but that creates an infinite amount of kind of complications or infinite amount of permutations that folks can get into, which makes this more complex. And by the way, one of the things we're seeing is that the rise of kind of all-in-one players that pretty much try to give you the full stack as in one thing. But the choice for, let's call it a Stripe or a Robinhood or a Ramp or any one of those is really kind of first defining the use case. Are we paying in? Are we paying out? Is it about global money movement, etc.? But then they have to choose first basic stuff, right? How do I think about wallet infrastructure? How do I think about custody? Am I custodying funds or am I not custodying funds? Are these non-custodial, right? If it's non-custodial, and this is where regulatory comes in, what technology am I comfortable with? Not just today, but technology that will kind of stand the test of time on compliance and non-custody. So for instance, the reason, we in a very biased way have chosen TSS MPC is because we have extremely strong compliance kind of, confidence that I don't hold the full private key. I hold a share and the user holds a share, and the user has kind of, the ability to block any signature or do anything there. And so a lot of the decisions are around not just technology, but the regulatory impact of that technology. So wallet kind of decisions are important. They have to choose how they on-ramp money into a chain or off money from a chain, right? They have to choose how they do for FX and kind of settlement at the last mile. But then if they're more sophisticated, they actually have two more choices, right? The first one, and that's where you see a Robinhood come in or a Stripe come in, they have the choice of, do I choose a chain that exists or do I build my own, right? Am I giving away a part of the revenue that I can have of building a network, or do I build a network on my own? And within that, they can choose, do I do it as a layer 2 solution or an L1, right? You can see Robinhood choosing a layer 2 versus Circle and Stripe both saying, look, we're building our own layer 1 solutions, right? So that's another more sophisticated choice. And the last one is a choice around even, do I use a stable coin like USDC and USDT, or do I white label my own, right? And enjoy the treasury revenues there, right? So you have these increasing complexity decisions, and you don't have, for anyone listening who's in these shoes of making these decisions, you don't have to make all of these on day one, but these are kind of different levels of complexity that you can go into that have far-reaching consequences for how your product is built.
Yeah, and it's just a teaser to go deeper into this report. Again, I mean, this is a long report. We're just hitting the highlights here to actually explore deeper those implications, because there are very important implications. And I think what's interesting, again, about Dynamic here is that you guys are partnering and integrating, and really the ecosystem around Dynamic as a company is strong enough where, from my own vantage point, companies who have specific priorities, who want to go build a non-custodial thing and have that be a huge priority, with users have keys, they sign everything, it's like incredibly focused on that priority. You guys can serve that, but you can also serve a company who's like, maybe more on like we want to own that side. We're the zero
Yeah.
hashes of the world, and we want to, have a custodial model, and you guys can, serve both, which is really cool. So dive into the report. Don't stop here. Number 3, blockchain rails offer advantages over traditional systems in key areas. So Itai, what are some of these key things that you're seeing
Yeah.
blockchains disrupt here?
Yeah. So you're seeing this in kind of multiple facets. You're seeing this in kind of trading, right? And you're seeing this in money movement. But really at the um, at the end of the day, it's really about kind of um, 3 main things, right? 3 main advantages that crypto rails bring, right? If you're to benchmark crypto versus Swift or crypto versus ACH, etc. The first one is speed, right? In crypto land, we debate whether, 10 seconds is fast enough, or settlement time should be 1 second, or it's 5 seconds, or like, and some folks say, no, it has to be 100 milliseconds, right? Those are the debates we're having, right? It's not the debate that ACH has, which is, can I same day settle ACH one day, or do Fed now type stuff, right? And so the speed component, and that is doubly true in Swift, right? The speed
It's a weekday.
component, yeah, exactly. That's advantage number 2. We'll get to that in a second. But to your point, the speed component is so fundamentally different for a global money movement type action that it's remarkable how of an order of magnitude, 2 orders of magnitude shift that is, right? It's your ability, just like you Venmo someone and it just shows up. It's the ability to do that globally, for whether it's $1 or whether it's $10 million. The second one, and to your point, is, hey, we are kind of in a world that works 24/7. And it is insane that you cannot trade outside working hours, that you cannot move money outside working hours, that your bank kind of says, great, we'll settle it tomorrow. That is an insane concept that cannot exist in the future. There's no, I'm willing to take if anyone's willing to take the other side of that argument, I would love to have that debate. But my argument that regardless of crypto, ignoring crypto, let's assume crypto, that we would still be arguing that in the next couple of years, we're going to have faster money movement, and it's just going to happen 24/7, right? And crypto enables that, right? So that is a second really, really important point. You can see this with trading, right? And tokenized stock, right? It's the argument that, hey, why are we limiting our like window of trading to like 7 hours a day? Let's just make sure it's 24/7 and you can actually trade stock. The third part is around, or when I said 3, I really meant 4. The third part is about fees, right? It's like, what is your cost when you send $100 from part 1 to the world to part 2 to the other side of the world? What is your cost doing so? And again, we're arguing in crypto land about, okay, 0.001 basis points, so like the fees are extremely efficient versus a fee of paying someone in a non-primary rail of essentially not US to the UK, but rather US to Nigeria, right? You can have significantly more impact there. And the fourth one is really the global natures of this, right? Is the fact that you don't have to mix and match different systems, right? You don't have to take Pix in Brazil and UPI in India and combine them, and then take Venmo and take like Bit in Israel or whatever and combine them. You have a single unified system that actually works globally. And that's an extremely powerful advantage that crypto brings.
It's really, to be honest, reading this simply on paper in a single sentence is probably one of the best simplified descriptions of why stablecoins are just taking over finance in this way. Like, all of these things uniquely deserve their own attention and own spotlight, because settlement versus availability versus cost versus the global nature of it, all
Yeah.
4 of those things are different. and they all combine and kind of shine in different ways depending on what payment use case you're trying to disrupt. And some people
Right.
I've seen, I don't know if you've seen this, but some people will only look at one thing and they'll say like settle, let's just pick settlement times. Like, oh, like RTP or this,
Yeah.
specific region is pretty fast. Like what's the big deal? But you're like, okay, you're only looking at one of these things. Um, it fires me up to actually have all four of these things. And maybe what could be cool to do, we could even work on this with you guys, is like the recipes of, if you take those four areas, which use cases, in what parts of the world, for instance, are like, combine three of the four, we're disrupting this. Combine one, you're disrupting that. All right, moving on. I think we have, let's see, we have just two more here. So, sorry to make you dizzy. So regulatory
Yeah.
clarity. We're going to be talking specifically with Kevin Lehtiniitty and the Borderless crew on this today. What are you learning around just the crazy couple months we've had on the regulatory front?
Yeah. So, first, to your point, Kevin's an expert in this, right? And the Borderless team are experts in this. And so, and this, by the way, alludes to why we wanted such a kind of great kind of set of partners to work with us on this, is because there is no one expert in this. Dynamic is, we do a lot of things really well. We're the experts on everything, wallets and the space in general, but there's so much nuance here, and bringing in folks who are the world leaders in this stuff is critical, right? And that's why we structured the report as is. Now, to your point, look, crypto does not live in La La Land. Crypto lives in the same land of regulation as everything else. Okay, in order for this to be the way global money moves, you have to have regulatory clarity, and you have to ensure folks follow that, right? That crypto does not give you any additional rights on compliance or regulatory versus anything else. You follow the same rules, and when the rules aren't the right rules, you kind of want to make sure that you have regulatory clarity, in order to operate within what's right. Right, and I'm extremely bullish on this. I'm still happy about the Genius Act and kind of clarity, etc. They just provide, as the name suggests, a lot of clarity for us.
100%. All right, last one here. Number 5. Launching a stablecoin app or feature set is no longer a massive lift. Maybe give us the before and after of like 4 years ago. What would it have been like versus now?
Yeah,
high level, obviously.
Fair enough. And here we're biased, right? Because this is where dynamic plays, right? We're a wallet infrastructure company, but really we try to abstract away crypto, right? It should be the vision of all this stuff should be that you wake up in the morning, you open Cursor, or you open Windsurf, and by midday you have a full working Venmo competitor or neobank. Right? That is the vision. That's what we're going for, and that's what will enable this industry, right? If you are to move 4 years ago, you would have to think about, wait, folks need to save their seed phrase, and how do I move money into someone's wallet? And how, I need native currency like ETH in order to move money within a wallet to a second wallet, right? And I need to, how do I think about custody, and how do I think about recovery, and how do I think about all this stuff, right? And that stuff does not exist anymore. Right? These are all problems that are soft problems that you should not think about when you're building your app. You should really think about, just like you implement Stripe and you have, credit card payments, or you implement Plaid and you can kind of connect to any bank. You should be able to implement dynamic or a set of tools and just have crypto enabled, right? That is what we're going for. And that is kind of the main takeaway from this, is to essentially just be able to wake up in the morning and build your global app.
Yeah. There are a lot of things behind the scenes here. I know I'm sharing my screen. We don't need to go into all of this, but I know you guys have described the business from just a visual standpoint as electrical sockets in the house, and just making it really simple to use end applications, plug in, get power, get energy. It's almost like, imagine having to, anytime you want to use something that requires electricity, needing to go and build that wire system and connect those dots manually. It's interesting. I just love that visual that you guys talk about.
It's exactly right, right? Like you do not have to think about how your electricity system works in your house when you buy a refrigerator. You just assume that that thing connects and the rest kind of works. It's the same with a computer. You don't need to think about how computers work, or you don't need to think about how LLMs work when you ask ChatGPT a question. That is what we're going for here, which is the full abstraction of this complexity and the ability for you to just do it without any kind of knowledge of crypto specifically.
Yeah. Anything as we close here? Really excited to just have the next few sessions here with these builders and founders. Was there anything for you, Itai, just as from your vantage point as the leader of Dynamic and just working with some of these folks directly that you uniquely learned or surprised you, or stuff that maybe stood out as well? Like I actually was slightly surprised or intrigued by this thing specifically on the report.
Yeah,
Or
I would argue that the effect of the report was surprising to me, specifically around the number of startups that are being started now that leverage all these tools that we were not aware of. So we got outreached by, I was just last night, literally at 11 p.m. my time, I was chatting with a company out of India that is doing kind of a crypto first neobank there, right? And that I would not have heard about that company without this report. And that has enabled, like, they read this report and they're like, this is exactly what we're building. These are the exact tools we're building. And so that was surprising to me, is how much this resonates with folks. As a result of this, we're going to have a V2. We were fortunate to have a lot more partners reach out to us. So we're going to have even more kind of expert opinions that folks would be able to read. But that was surprising to me, is this is not hypothetical. This is happening now. Whether we write the report or not write the report, this change is happening now. This revolution is happening now. And I think if we can bring more of it to the forefront, we're happy campers.
Yeah. And so this was a business that, for example, saw this report, began to use it in this research or insight-driven nature. It's helping them think through the decisions they're making, and now has turned into what sounds like a really meaningful lead or partner for you guys.
That is exactly right. That is exactly
Awesome.
right. It's the same with a lot of Web 2 companies that have been reading this report. I think if you look at the types of companies that have accessed it, it's from the full spectrum of Web 2 fintechs, banks, etc.
Yeah, it's awesome. There's a huge power in content. It's something that we just are very rooted in within our business as well. Is just like putting content out there, helping people understand, working with top voices, people who are building, sort of like the adults in the room, if you will, like really trying to help folks build and think about this in a level-headed way. There's such a desperate need for more of that. So Itai, thank you, and shout out to Joanna too. We have to give her a shout out. I'm sure she was behind the scenes doing a lot of stuff to make this work. So
Joanna, and actually one more person is Matt on our team, Pearlstein, who actually led this entire thing for us and has done an incredible job. So shout out to him as well.
Awesome. All right. We'll move on to our next session. Thanks, Itai.
Very cool. Thank you so much.
All right, Kevin Lehtiniitty, how are we doing, sir?
Hey, Drew, good to see you. How are you?
I'm doing great. I am really grateful, first off, that you decided to work with the Dynamic team to put this report together, and just it's always a gift to be in discussion with you. So thank you. First off, how are you guys doing generally? How's the business? How are vibes right now? I just got done this morning recording our daily news show, and I'm just like slightly overwhelmed with everything that's going on. How are you guys feeling over there?
It's a good time to be in stablecoins. I think that's for sure. If you're not growing in this market, then there's probably something seriously wrong with the value proposition or the business model. I think for us, we've always believed in the layer that does the payments network, orchestration, etc., needing to be incredibly neutral. And for us, Genius has been a phenomenal spur where all of a sudden we're thinking about things and kind of from a product standpoint, CPN is probably the closest thing that exists to Borderless. When saying, geez, if the entire market collapses to just using USDC, then what's the point of Borderless versus CPN? But now with Genius and everything that's coming out on the issuance side, whether it's new chains that are being created from like the Stripes and others of the world, whether it's new stablecoin projects that are being announced, or at least rumors from like the Amazons, Walmarts, or the banks like Bova's, or the fintechs that are getting into things, USDG's growing, etc. The more that reinforces our belief that you need to have a credibly neutral layer that isn't owned by Circle or owned by Tether or owned by someone else that's able to kind of bring all these things together. And I think Visa articulates this well in their value proposition of a network of networks. And that's certainly where we think we play in. And the more growth there is and the more diversity there is, the more value there is in a network of networks. So it's been good vibes. Is probably the shorter answer to your question.
Yeah, it's a really interesting. I've heard you say this in person with people, and I just think it's a really helpful place to start this conversation. Is this network of networks, this kind of CPN framework that I think you guys have, in some ways, really you think about yourselves in a similar way, but obviously different. Help people understand that framework, this network of networks framework, and how CPN is similar to what the Borderless network is doing, but obviously very different. Like, help us understand the difference there.
I think it comes back to some of the stablecoin roots that we have as a company and that I have. So I've been full-time on stablecoins since 2016, which is a little wild that it's been, 9 years.
What was the name of the stablecoin project? The first one that you said it was like the first essentially.
I helped launch TrueUSD, which was the first US-based fully reserved stablecoin that kind of pioneered the model of using a qualified custodian to hold all the assets versus an offshore corporate bank account and all those things. And I think have, long suffered the traditional entrepreneur's curse of being too early to markets. And 9 years in stablecoins, I think definitely counts as too early to markets. But, have kind of been on the issuance side with helping TrueUSD, then there was a whole basket like True GBP, True CAD, True AUD, True Euro, which is the first basket of tokenized currencies in the world on chain. I helped write ERC 1400, which was the Ethereum token standard for tokenizing RWAs, with kind of an aim at T-bills, money market funds, right? If stablecoins are going to be kind of currency on chain, the next obvious thing is then the yield-bearing assets that back them coming on chain. Done a lot of liquidity stuff, building infra for on and off ramps that were in, powering MetaMasks and other kind of large retail adoption, moving, tens of billions and hundreds of billions of dollars a month, respectively. And when I looked at Borderless, what I really saw was this growth of locally licensed providers. And this touches on a little bit of the dynamic playbook, where yes, stablecoins and blockchains are inherently global, but fiat currencies and regulation are inherently local and will remain local. And you're going to have this juxtaposition between these global settlement layers, Solana, Base, some of the stuff that's coming with ARC and Stable and all these other things, and USDC, USDG, all the other currencies that are being tokenized. But that's going to be juxtaposed with there will never be a universal banking license. 2 years from now, there will not magically be I am a stablecoin bank. I am licensed in every single country in the world through this one license, right? Central banks aren't going to completely abandon their fiat currencies. We're not going to wake up one day where the Indian government says, you know what, screw rupees. We're just going to make USDC the currency of India. So there's always going to be this juxtaposition between this kind of global technology, but then these local regulatory frameworks and kind of fiat currencies. And what we saw was basically this growth of locally licensed providers in certain geographies, like Bridge in the US, BVNK that kind of started in the EU, Bitso in LATAM, Yellow Card in Africa, Reap in Asia, etc. And we started to say, okay, imagine if something like Swift didn't exist and every bank had to connect to every single other bank that it wants to transact with around the world. That's insanity. And that was the current state of stablecoins. If you were a licensed orchestrator in the US and you wanted to do a transaction to Africa, you had to go integrate and work with a licensed provider in Africa. And you have to do this one by one in every corridor. So this is fixed with payments networks. We don't need to create another blockchain. We don't need to create another stablecoin. We don't need to create another licensed liquidity provider in a region. What we need to do is create this network of networks where people can connect to Borderless, and Borderless is already connected to dozens of regulated counterparties in different parts of the world. And they're then able to transact with all of these different counterparties for the other leg of the transaction, kind of through a Swift. As a bank, I connect to Swift. Swift is connected to all the other banks. Now I can transact with all the other banks through Swift. The exact same concept. As a regulated stablecoin orchestrator, I can now transact with all these other orchestrators that are regulated in different regions by connecting to Borderless. And this sounds a lot like CPN. There's actually a lot of similarities in the CPN white paper and our original website that we launched like a year ago with beneficiaries, originators, kind of this concept of PFIs or participating financial institutions. And it's a very, very similar framework. Our difference is we believe that this needs to be credibly neutral. We believe it needs to be multi-chain. We believe it needs to be multi-stablecoin, not just support USDC, but support USDC, USDT, USDG, PYUSD, et cetera, in addition to the non-US stablecoins that are going to come as well, right? We think that if VisaNet were called Bank of America settlement system, it never would have gotten the global proliferation because there would have been no way that they would have convinced all these competitive entities to come in on it. Right, I think the consortium model was the only way VisaNet could be born, and we think in this world a credibly neutral layer that isn't owned by a particular stablecoin or a particular blockchain or a particular piece of infrastructure, but is its own standalone neutral layer. That's the only party or type of party that's going to be able to bring all these competitive forces together. And so far we've got dozens of fierce competitors that have all come together onto the Borderless network. So it seems to be working.
Yeah. You in the dynamic report itself, you described this dynamic, for lack of a better term, you described this as a liquidity maze. You said stable coins are flowing globally, but banking license, compliance regulation, and FX liquidity are stubbornly local. Give us a sense of this dynamic around, I'm going to stop saying that word after that, this reality around the licenses and the regulation that we're starting to see in developed markets that are starting to become way more clear, things like the Genius Act, versus what you've mentioned in this report with where the corridors where stablecoins are growing fastest actually are with these emerging economies. What's that like right now from your perspective in terms of the local regions where the stablecoin use cases are actually popping up and something like Borderless becomes really, really needed, and speak a little bit to that reality and what you're seeing?
The more fragmentation exists and the less clarity there is, I think those two things go hand in hand. I think the less clarity there is, the more it leads to fragmentation. Then the more useful it is to have something that brings all that fragmentation together. And I'll give you a great, maybe more concrete example. As we look at US and EU, those now have some pretty clear frameworks. Genius is in place. There's more coming from this administration. EU kind of led the way with the MiCA regulations and all of those things. But if we look at where stablecoin flows are not necessarily originating, but heading to, it's mostly Latin America, Africa, Southeast Asia, these typical kind of emerging markets. And it's those markets for a few reasons, among which the banking systems are less developed. The currencies are less stable, so there's a stronger desire to dollarize your savings versus holding in the local currencies. And in those markets, the regulations around stablecoins are much less evolved, but are also quickly moving. So if you look at things like Brazil, there was kind of this recent change among IOF tax where it was 38 basis points, and it was hundreds of basis points. Now maybe it's 38 basis points again. It's like the US and EU governments typically, maybe some caveats, don't like randomly change by 10x various tax codes and other things like that on the drop of a hat, right? That happens a lot more in emerging markets. And if we look at something like Brazil and we look at the stablecoin liquidity that exists there, you have a lot of stablecoin companies that are building liquidity in Brazil, right? So you have like the Trace Finances, the Bitsos, the Noncos, the Avenias, the Blind Pays. I can go on and on and on. There's kind of all these people that are becoming liquidity providers between BRL and stablecoins, which is great. That's a very needed piece of the infrastructure. But if you pull the FX rates between all these different providers, and Borderless is tapped into all these different FX price streams across everybody on the network that we see in real time, there are massive differences between kind of one provider's pricing and another provider's pricing. And it's not necessarily consistent who is the best provider all the time. That's not actually a thing. It depends on kind of the current liquidity state in the markets. It depends on the type of a transaction. A consumer transaction, a B2B transaction are massively different. So then you start to get into the question of like, what does best execution look like? And how can I say, okay, great. Now, instead of being beholden to a provider, which has a couple issues. One, it means I have no redundancy if there's any sort of downtime, right? So my reliability takes a hit. The other is the switching cost becomes super high because I now need to rip all these APIs out and integrate new APIs if I want to switch to a different provider. And then three, I'm beholden to that provider and their rates. And they know how high the switching cost is, which means they can extract much higher rents from using their liquidity and their service versus connecting through something like we've built, where it says, great, there's 4 providers that you're able to access and dynamically route to. Now we can do best execution. We can look in this second and we can say, this is, X BRL for USDC. This is Y BRL plus USDC. This is Z BRL through USDC. And we're going to route that transaction to this liquidity provider here. And what that effectively does is it takes these silos of liquidity, even within a single country, but they're siloed by these providers, these liquidity folks. And it puts it into kind of one liquidity pool for that country where you're able to access the liquidities of multiple providers, combine them together. And now imagine that, but on a broader scale across, 60 countries, not just one kind of local geography. And that's a lot of what we talk about with kind of this maze of liquidity where you need to navigate, okay, this is really good liquidity in Brazil. This is really good liquidity in South Africa. This is really good liquidity in Kenya. This is good liquidity in Argentina. This is good liquidity in Mexico. And then obviously these liquidity providers, they make their money on spreads. So their incentive is to have as much spread as humanly possible. Your incentive is to pay as little as possible for that liquidity. And there needs to be, some sort of a matching engine in the middle that finds that.
Do you feel like because the matching engine or the kind of smart liquidity routing system that you guys are building, have you seen, what sort of dynamics have you seen within the network itself? Like from a user standpoint, to your point, it's great because you can have these types of companies really compete for the best product, the best price, the best experience. When you think about the PFI side, what are you seeing as maybe some of the core benefits to being involved in this network? You mentioned a lot of those folks in Brazil or, companies in that specific region. Speak a little bit to like the benefits that those types of companies see on a global scale on the flip side of that side of the network.
We think about these companies in kind of 2 columns. One is the beneficiary column, which are companies that are having transactions routed to them and they're providing the local liquidity. And you may think that they generally really don't like Borderless because Borderless is creating an environment in which they need to compete with others in order to win that order flow. But that's often not true, actually. This competition happens on a daily basis from a BD standpoint, around brand standpoints, around marketing dollars, around, they're already competing with these companies. And what Borderless does for them, which they like, is it makes it a meritocracy. It's no longer a question of, do you have a better Rolodex than I do? Was your conference more successful than my conference? Did I talk to the right guy at a happy hour? It's now purely, does my product perform better than your product? And it creates a very strong set of meritocratic rules versus this more ambiguous, oh, I lost a deal to my competitor because I talked to the wrong guy at a bar, which nobody likes at the end of the day, right? And then on the originator side, what it unlocks for a lot of these companies is most folks in the network are both beneficiaries and originators. So great, I'm licensed in Brazil and I have my own liquidity that I provide between BRL and stables. But a lot of my customers want cross-border payments. They don't want just the BRL leg. So now I can also tap into Borderless as an originator, and I can then transact with the me of Kenya, as an example, or the me of Nigeria, to now enable my platform to serve an end-to-end Brazil to Nigeria corridor. So what we're seeing is a lot of these folks and a lot of orchestrators are starting to build full kind of corridors end-to-end. And the fastest way for them to get access to a bunch of globally, licensed counterparties around the world is to connect to Borderless. And all of a sudden they have the connectivity pre-built into this dozen, 24 different thems, but in different markets that they can collaborate with.
Yeah. Yeah. Fun question for you, just kind of as we close here. When you're building this, it seems to me that this is, I don't know, this might not be the best example, but it's kind of doing what Shopify did to starting selling online. Like, it's just like, we'll handle all of this crazy complexity for you on the back end. Just go build we'll just go build a website, start taking payments. It's super easy. You don't have to go integrate payment tech. You don't have to go integrate like fraud and compliance and security stuff on the back end. Like, just go use Shopify and pay $20 a month or whatever. Question for you: if you were to be not building Borderless, leading the charge there, what type of business would you start using Borderless that you think would be so like really uniquely compelling, knowing what Borderless can unlock and kind of mitigate now? Like, what's the drop shipping in the Shopify world with Borderless, I guess, is the question.
I think the next massive primitive to come to fintech is going to be global dollar accounts. And we're seeing some momentum there. As an example, Stripe released their kind of concept of global dollar accounts. We're seeing a lot of startups building global dollar accounts. That's probably actually the number one customer demographic right now on Borderless's network, are people building these global dollar accounts. And the basic concept is, hey, I'm going to hold a stablecoin balance, and I can take that stablecoin balance and I can deploy it in real time and fiat anywhere in the world by connecting to all these global off-ramp providers, right? That's kind of the general concept. And on the deposit side, same thing, right? I can deposit into this global dollar account from anywhere in the world by on-ramping into a stablecoin and holding it in a wallet. And I think this is fundamentally transformational in both the consumer and the business space, because all of a sudden we take away the cost of capital of pre-funding. So typically when you're running a global payments business or a global neobank or remittance business or something like that, you create the illusion of real-time transactions by free funding all these liquidity pools in all these different geographies, different banks, things of that nature, so that you can basically create a deposit here and then initiate a withdrawal out of this bucket, and then you end up rebalancing that in some sort of a treasury function. All of that complexity goes away. If you can actually hold a global balance, all that cost of capital goes away. You no longer have to go raise $100 million round in order to build a global, payments business. You can do it with stablecoins from day one. And on the consumer side, you no longer need to have, this is my remittance app, this is my neobanking app, this is my, something else app. All those things consolidate. And now all of a sudden, every neobank is a remittance app, because your neobank balance is now deployable globally. I don't need to take my bank account over here and go link it to Wise over here. And it's going to lead to this massive kind of concentration. And I think it creates the first legitimately global fintechs who are legitimately global from day one. And if I wasn't building the infrastructure to power that, I would go build that.
Yeah. When the companies that maybe are building that come to mind, I do this where I like force people to name names. I'm not trying to do that. I'm just like, I'm inherently curious of like when like the companies or founders that you're seeing who are building those types of global dollar apps, maybe I think regionally specific ones seem really interesting to me. Just like the companies that can, like, I think about like Takenos and Latin America, just like very deep into a specific market. Any of those types of companies come to mind there that you see as like maybe the recipe or model that you would go after in a specific market, for instance?
I think some of the really interesting ones to look at are like the Yopagos and LATAM, the Polars that are looking more at Southeast Asia, the NSaves that are looking more at like EMEA. Those are the sorts of companies that I think are really interesting to track. Now they're all doing kind of global dollar accounts, which means they're in a, offering kind of global connectivity, which is great. I think that's really important. But from a GTM standpoint, Yopag was focusing on LATAM, Polar's focusing on Southeast Asia, and Save's focusing on like Pakistan, Bangladesh, like these countries that historically have had not the world's most sophisticated access to financial systems, and bringing that access through stablecoins. I think that's a wonderful mission that we should all get behind.
So in some ways, they can unlock the functionality they need for their core user base almost instantly once this integration is done.
Exactly. It's
pretty
global from
amazing.
day one. It's default global at this point, right? They connect to Borderless, and then slightly more complicated, but in a high level, right? You connect to Borderless, you log
it's like
in,
a light
you see
switch. You just
the provider marketplace. Exactly. And then you can say, great, I want to enable Bridge for the US. I want to enable Bitso for LATAM. I want to enable Yellow Card for Africa. I want to enable Reap over here. I want to enable PDAX. I want to enable, it's where Borderless itself isn't a provider. Borderless is that connectivity layer. So
and on
you
the
connect
wallet
to Borderless.
side, Dynamic, is this where you and Dynamic, you have an integration there? Speak a little bit to that piece.
Yeah. So Borderless is purely a non-custodial platform. So we focus on the connectivity to these different providers from the wallets. And we're fortunate enough that, we have great partnerships with the leading wallet providers in the world, including Dynamic, that make it really, really easy to use Dynamic for your wallet infrastructure, and then use Borderless for your connectivity layer, and then, enable companies like Bridge and others to provide the liquidity and the orchestration at the end in the regions that they support.
Cool. So if I'm Polar, and I really love Dynamic, I want to use them. These two pieces can play nice together and integrate really easily.
Exactly. There's a lot of complexity in the integration that's just kind of handled on the back end because we've done this partnership.
Awesome. Kevin, man, thanks for the time. This was fun. Appreciate your thought leadership and your involvement in this report. Exciting stuff, what you guys are building, and best of luck as you guys close out the year. And we'll continue to follow stablecoin regulation as it continues to evolve and deepen around the world. Would love to have more of these conversations with you. It's always a gift.
Likewise. Good to see you, Drew. Thanks for having me on.
All right, for our next session, we have joining us Denney Kwok from Mento Labs, Chief Product Officer. Denney, how are we doing today, man?
Hey, Drew, doing great. Pleasure to be here.
Yeah, it's been an exciting session so far. Excited to dive into just your role at Mento Labs. There's so much buzz around the company itself. I've heard so many amazing things, but this is actually my first time getting a chance to dive a little deeper into Mento. So why don't we start with, we'll get to the involvement specifically on the FX side within this report, but maybe we start with your role at Mento and just a little bit about Mento for those who don't know what the company does.
Yeah. So super high level, Mento is a stablecoin platform and powers on-chain FX infrastructure. I'm the chief product officer here, as you mentioned. I do everything from build product, also to building partnerships and understanding, how our users can benefit, how we can reach new users and whatnot. So do a little bit of everything here. We're a scrappy, lean team. A little bit more about Mento. We have 15 local stablecoins live, everything from the G7 currencies all the way to some of the more exotic long-tail emerging market currencies across Africa, Latin America, Asia, and what have you. And really the real magic of Mento is that we kind of highlighted it in the report, but we believe that the missing piece to enabling FX on-chain is what we call the FPMM infrastructure, fixed price market makers. different to how AMM works, FPMs allow you to trade at the real world FX rate, which isn't susceptible to, pools being unbalanced in the AMM construct, which is more natural for, crypto-based assets where price discovery happens on chain. If you have, two currencies, you can't really have price discovery on chain, because if you can't trade a Brazilian real for, I believe it's around 5.5 USD, you really have no utility when there's huge slippage. If you can only get a USD for 6.5 or 7.5 Brazilian real, then it kind of breaks the use case for those stable coins, right? So what we're doing is providing this FX infrastructure, allowing users, traders to really access FX rates with stable coins all on chain, powering, a plethora of use cases, from payments to hedging to arbitrage to just straight up directional FX trading strategies.
Tell me a little bit about peeling back some of those use cases specifically. You said you have 15 of these now. These are on-chain representations of stablecoins backed to all the different fiat currencies, major fiat currencies that really enables some of these use cases. Let's just, for you right now, I'd love to unpack maybe some of the teams or companies that are using this, some of the use cases, those couple that you mentioned, like what perhaps, give us like a before and after Mento, like what was kind of happening before you have all of these fiat currencies represented on chain. And then now what is possible with something like Mento for maybe one or all of those use cases would be really interesting.
Yeah, let me start by kind of laying the land of what was before this kind of infrastructure existed on chain. There have been a stable of stable, quote unquote, no pun intended, a stable of non-USD stable coins out there for the last couple of years. But really the use case that they've been used for to date has really just been on and off ramping, because there is no good price discovery mechanism on chain. So you weren't really able to swap, let's say a Japanese yen stablecoin for a US dollar stablecoin on chain without having that reference price, right? So none of this was really able to be facilitated until, we kind of launched this FX infrastructure where you do have those rates come on chain. Through our Oracle network, we have 3 and always expanding our Oracle providers to have the best rates possible, where we take kind of the mid spread from different FX desks across the world to bring that on chain. So we partner with teams, such as Chainlink, Redstone, and we also have our own in-house built oracles. Now, with that, this opens up a whole new world of use cases, like I had mentioned. Thinking about implementing FX trading strategies, all staying on chain without having to use, TradFi rails, which is what we're all building towards, right? Traders, prop shops, market makers can all access rates, hedge on chain, or take, weighted directional bets on different currencies without having to kind of on and off ramp and having those stablecoin rails power it on chain. A really big and exciting use case that we're hearing a lot now in the stablecoin world is, how payments can be powered by stablecoins, especially cross-border payments. There's a lot of teams building around this, names that you guys all probably have heard of, but a lot of that is facilitated through USD denominated stablecoins. So some of the pain points that you have there is you're exposed to kind of the conversion rates on both ends of the transaction when you make the payment. On the sender side and on the receiver side, you still have to rely on TradFi rails with the USD denominated stablecoins. Now, imagine a world where you just have 2 currencies. So just using 2 that I referenced earlier, if you're making a payment from Brazil to Japan or vice versa, and you're a company, if you have those tokens all on chain, stablecoins all on chain, and you have the exchange rate all on chain, you could facilitate that transaction and kind of leverage all the benefits of being on chain, instant settlement, the real rates, and what have you, all done without having to really expose yourself to the TradFi banking rails until you're ready to off ramp. And this powers a lot of other things like global payroll. Remittances is another big thing that we've been working through. So, a lot of things that can be built on top of this. And I think another exciting thing is you're seeing all these teams build up kind of neobanks or crypto bank type applications within their super apps. So, really cool stuff being innovated on in this space and sector.
The lack of having something like this historically, or something like this be extremely popular or widely available, in my mind has prevented more stablecoins from it just being able to exist natively on chain, because you don't have the parity or the infrastructure to just keep things in stables. But now it's like, in my view, this really does create a foundational layer where, because of folks like Mento, you guys can actually allow for this global economy that is, like we talked with Kevin from Borderless before this, of just, the world of fiat money in people's minds and people's lives, and the governments around the world who are going to be specifically wanting fiat currencies to continue to exist independently. Like, that's not going away with stablecoins. So the infrastructure that this provides is so interesting. Are you seeing, like, walk us through like a couple questions for you? Like, what are the most difficult parts about getting this type of infrastructure set up effectively, like on the product side, given your role? What are some of those key hurdles that you guys have had to face to stand up something so foundational like this?
I think it's a couple of things. One is really getting the partnerships in place. Like, we are kind of lower level on the stack of the technology stack for empowering this rail, right? Like, we are the kind of pricing mechanism. We also issue the stable coins, but we really see ourselves as the FX layer for this whole broader like stablecoin FX economy. So really, it's when you're building something new in a space that is unfamiliar to many people, it's really about like standing up the partnerships and getting that ecosystem and that flywheel that we're all familiar with. For example, if you're like an L1 chain or an L2 chain that's like just starting to launch, you have to invest all this time, effort, and money into building, like the DeFi ecosystem, building all the ecosystem applications and everything, and building up users. There's a lot of corollaries to that in building this like stablecoin payments, FX infrastructure, where you have to go all the way through this like complex payment stack. There's a reason why, Visa, Amex, MasterCard have had their moat for, decades upon decades. They built this like complex infrastructure and network that has just stood the test of time. And standing that up is, no easy feat. And we're just hammering at that day after day.
What you mentioned a few of these partners that you have selected in the early phases. I think Redstone, Chainlink. Speak a little bit to how you work with those types of companies and what they unlock for you. It seems like those are really core pieces to making this puzzle work.
Yeah. How we bring these rates on chain. Oracles are kind of the cornerstone or bedrock of a lot of pretty much every, application built on chain. Every dApp pretty much needs it in some way, shape, or form. The integration that we built is kind of unique in the sense that we're bringing kind of these FX rates from all over the world, bringing that on chain in like a push manner where we have these rates available at any given time, so you can reference them, and then as users do swaps and get quotes, like they can access the rates that only institutions typically can access. Like if you're traveling and going to, I don't know, let's just say like Brazil, as in I'm an American. When you go to Brazil, you have to either go to like the currency desk at the airport or a money changer or a bank or an ATM. And then you're subject to those like wide spreads.
That's where, in this conversation so far, that's where my mind has gone, is just like, I think that's for a lot of, at least Americans, the felt experience of like FX played out in real time. But yeah, I think we can all relate. Good framework.
I think we can all relate to going to the ATM, throwing your debit card in there, and then saying accept this like 10% plus spread exchange rate. And it makes you feel like you're being gutted.
some of the most frustrating moments of travel internationally have to do with that FX desk at the airport. I think everyone, like hundreds of people throughout the day, just like experience how frustrating the traditional fiat stack can be. And I think the price gouging and unfairness that you're talking about is so felt in those experiences. But like, tell us a little bit about more of that broader opportunity here. Like, this is not just something that tourists are feeling at the airports.
Yeah.
This is a kind of a structural FX problem globally. When you guys think about the opportunity, is that sort of how you think about it?
Yeah, completely. And we're only one piece of the puzzle, and talking about like building up that ecosystem, I think there's many critical partners that we work with today or haven't even started working with that are critical to building this like global infrastructure, right? Like I mentioned, most people in the world of like the 7 or 8 billion people, whatever it is now, can't access, institutional bank level rates that you have at like, Citibank or Standard Charter or any of these international banks that institutions have. What these Oracle partners allow for us to do, and like the magic of blockchain rails, is we just bring those rates on chain, and with our kind of FX swapping pricing mechanism, anyone with a wallet and internet connection can access those rates, and we really democratize that access. So to your question, like walking through like a real life scenario, some of our team has gone out to Africa for various conferences or various grassroots outreach. What you can do is, as an like American, I have like a US dollar stablecoin. What I can do is immediately swap that for let's say you're going to Kenya and a Kenyan shilling. We have a partnership. We have an exclusive partnership with Opera MiniPay. You can directly off-ramp that Kenyan shilling into Opera MiniPay, use Opera MiniPay to pay for water, pay for a cab, or what have you. Mobile money is a really big form of payment there, similar to, as Americans, we have Venmo, we have PayPal and whatnot. Mobile money is really big there. So you can immediately off-ramp that and spend it directly at vendors or stores in person, all without leaving your phone and all without having to hit that dreaded ATM machine or FX desk. So yeah, I think it's really powerful. That, and like many like small businesses can access this now too, especially if they have commerce cross-border. It just enables so much when you can open up the doors of what was gated institutional access.
Yeah, I think actually we've met with Charles now a couple times for our podcast.
Charles is great.
And
great partner of ours.
I mean, I'm extremely excited for MiniPay and just what they've done. So if I'm understanding this, so Mento will work with MiniPay specifically in these regions where you all have these fiat-backed stablecoins, embed them essentially within this mobile money experience on Opera, and then Opera can kind of trust and use Mento's wherever these localized currencies are needed. They can use Mento's stable coins to, kind of check off that box for their users.
Look, Opera MiniPay has enabled, they have 9 million users now globally. They've enabled a couple of things. One key thing, and really I think what ignited the growth of stablecoins, is giving users in emerging markets access to dollars. So any user on MiniPay can access CUSD, which is our USD stablecoin, on Cello through MiniPay, and save in dollars when they're facing hyperinflation in different parts of Africa, Latin America, or what country you have. We also have a native Mento dApp within the MiniPay application where they can facilitate many of these swaps, and by that, they can access all the different currencies that are available in their market or in other markets. For example, if they want to send money to, or stable coins to, a friend or family in another country. And then the magic of kind of MiniPay is that they've integrated all these on and off ramps globally so that you have real world utility when you want to or need to spend that in real life. Because at the end of the day, like you mentioned earlier, I don't think I personally don't believe there's going to be a world where it's only crypto rails and it's only stable coins or it's only fiat. I think there's going to be kind of this like happy medium and marriage between the two, where hopefully we see some like really ubiquitous and seamless user experiences where you kind of can't tell the difference. I think that'd be a magical world.
Yeah. So diving in really quick to the actual report itself,
Yeah.
this was definitely something you guys were focused on specifically within the Stablecoin Playbook, on-chain FX, converting stablecoins into local currency. For those who are listening and a part of this session, thinking about this as they're building, what would be the really core takeaway that people need, builders specifically who are architecting these types of stablecoin powered payment applications or cross-border payment use cases here? Like, what sort of framework or what are some of these learnings as you talk with builders and you're helping other folks who might be reading this report? What are some of the things that you would impart on them as we kind of close here and round out our conversation?
Yeah, I think like there's a lot to be done and built around like the financialization of applications and use cases. I actually spent a lot of time building product at Google prior to my journey into Web3 and building a lot of consumer products there. There's a host of these like super apps or neobanks that are being developed, and I think a lot of them can really, really benefit from using blockchain rails and using stablecoins in particular to power a lot of these use cases. Really, really cool ones are like Line in Asia, Grab, Tada, Rappi in Southeast Asia, Opera MiniPay in Africa and globally now. A lot of these applications can a lot of really, really new and novel use cases can be built in these applications and on top of these applications that are accessing, hundreds of millions and billions of users in aggregate. So I think like if you're a builder and you're thinking about integrating stablecoins and FX, I think there's so many new, cool, novel things that you can do to really, make the lives of consumers and everyday use cases like better and easier.
Last question, we got to ask about yield, earning on-chain yield in global and local currencies. Any things that you're seeing that get you excited on a global scale around creative ways that these builders can, think through incentives and earn yield on these types of things with Mento?
Yeah, we're kind of like the low level infrastructure, so we don't play necessarily in the yield game. But on Celo alone, if you check out some of the yield opportunities for our stablecoins, applications such as Uniswap, Aave, things like that, you can actually, I think the APR in some of these stablecoins are upwards of, don't quote me on this, I haven't looked at it in a couple of days, but upwards of 50+%. So there are some great, I would say, yield opportunities on this from, the general DeFi ecosystem. Now, I think the millions of users that we have using Mento stablecoins aren't really DeFi native or crypto native, as some of the listeners here might be, but they're just trying to access this for real world utility. But if you're kind of a DeFi crypto native person, I think you'll find some pretty interesting yield opportunities with these stable coins on chain.
Cool. All right. Well, Denney, thank you for this. We'll close the session here. Any final thoughts to leave the listeners with around Mento, what you guys might be coming out with in the future? Stuff that gets you excited.
A little teaser, we'll be launching a V3 of the protocol very soon TM. So keep your eyes peeled out for that. We also just announced our partnership with Wormhole, so Mento will be multi-chain in the very near future. And if you're building any type of applications with FX, reach out. I'm always happy to chat.
Awesome. Well, shout out to those teams. Thank you, Denney, for the time. This was fun.
Amazing. Thanks, Drew. Have a great one.
All right, here we go. Another session. Eleni, thank you for joining us. How are you today?
I'm great. Thanks for having me.
You know me, you know my background. So payments has like a very personal, crypto stablecoin payments is a very personal, just place in my heart. So excited to dive into what you're working on. I'm just personally a huge fan of Loop. I know you've been in this game for many years. Why don't we start with, for those who are joining us live right now, just who might be meeting you for the first time, your name, your intro, and then a little bit about Loop as we get started as it relates to, we're big fans of stablecoins here. So as I know you guys don't only do stablecoins, but as stablecoin native as you want to make this, that would be great.
Yeah. So I'm Eleni. I'm one of the co-founders of Loop Crypto. We've been helping merchants accept crypto payments for the last 3.5 years. But what you said is probably exactly right, where 98%, I think, of our transactions are actually in stablecoins. So
Oh my goodness. That's
and
wild.
even when merchants offer the ability to pay in other tokens, consumers are picking stablecoins. And so it really has proven to be the way that value is transferred on blockchains.
When did this give us a little bit of perspective and history on that number? Like it probably wasn't always that way. How is the kind of the method of payment or the payment vehicle crypto wise, how has that evolved in the last 3 years? You probably have an interesting vantage point seeing what you're seeing on the back end.
Yeah, when we got started, our viewpoint and our sort of premise was that if value accrues on chain, you're going to want to spend it. And 3.5 years ago, when we got started, a lot of that value was in more native tokens like ETH. And over the last, few years, especially in the last year, we've seen customers pay overwhelmingly in stablecoins. And I think that largely has to do somewhat with the rise of L2s. So you can think of maybe ETH as the layer that folks stored value on. So they hold a ton of ETH on Ethereum. But when they move to Base, or I know Solana's not an L2, but a fast network like Solana, I think they were more willing to embrace a stablecoin and use that stablecoin to pay. And so it's been this sort of confluence of events of cheap networks, rise of stablecoin liquidity, and then obviously most recently regulation around stablecoins that has really led to it taking off as a form of payment.
Yeah, I'm in the report you're quoted specifically, but that you're seeing e-commerce, AI tools, and a range of B2B applications take the lead in adopting this payment option. We actually just got off with Mento Labs, and they're really innovating within this fiat specific fiat-based stablecoins, non-US and non-US. I think they said they have around 15 of these now in existence. As you all think about doing what you just said for merchants across these different use cases globally, I'd love to just maybe tie some of these bows together with like someone like Mento Labs. Like, are you saying, on the back end, you might work with a group like that or a system like that to actually help settlement happen in a euro backed way or a local fiat backed way for merchants?
Yeah, I can definitely see that happen. If you're a merchant, sitting in South Africa, and at the end of the day, you need to pay your bills in South African rand, or someone's using an application where they expect, like the customer expects, to hold a balance in South African rand, you're trying to minimize that price exposure. And so immediately swapping into a stablecoin lets you fix in the amount that you get without having to wait for banking rails, like the actual fiat settlement. So I think I don't know if we're there yet, because part of the problem is putting all the pieces together. Like you do now need off ramps that support every stablecoin currency, but I can see a future for sure where that is needed.
Give us a little window into the payer and the checkout experience on Loop today, or what the core windows of the user experience look like. I know you guys have had some really interesting kind of product evolutions and different things that you've been charging forward with. Like I remember like recurring payments was a really interesting part of the journey. Like speak a little bit about to the different payment experiences that you guys are seeing is really interesting. And yeah, exactly kind of how that takes shape for the payer and the merchant on the back end.
Yeah. So our viewpoint is that, stablecoins or crypto payments need to act like any other payment method in a merchant system. And so what that means to us is when a customer comes either to one of our components, or you can just like totally white label our APIs and SDK and use your own front ends. We want to give that payer the ability either to make a direct payment where they send the money straight to the merchant's wallet, but on the back end, we're saving this customer paid with this wallet on this chain. Here is their preference, so that the next time they come back to you, we can show them exactly the payment method that they use, which is an experience that we have today that I think people take for granted, where if you go and check out on Shopify with your credit card, when you come back, Shopify either has that credit card stored for you or knows your preferred payment method. So the other version of this is actually giving approval from that wallet. So not only can you save, I like paying with X wallet, but you can save and this merchant is allowed to charge that wallet without me having to take an action. And that functionality unlocks really cool features like recurring payments, the ability to top up, the ability to charge a customer based on usage, as well as what we like to think of as like an app experience. Like if you think of a ride sharing app, I mean, what do? You save your payment method on file, you go take a ride, and then everything happens sort of in the background. It gets charged and you just walk out the door. And our tech really unlocks those type of experiences in a way that I think other payment providers don't.
Yeah, it's so cool. Yeah, when we say crypto payments or like stablecoin payments, it's so broad that it's almost like, all these different use cases and how this stuff comes to market is so diverse in terms of what the core infrastructure that you have been building for so long, how that can sort of take shape. So it's always fun to kind of see how this is continuing to evolve and get more dynamic over time. With the Uber use case, for example, would you say something? I mean, that was always kind of like the golden light that you were following. Like that is such a complex signing, custody. It's a very complex thing to actually enable that type of Uber-like experience. One, is that available today? Like if I'm building an Uber on chain, like could I work with Loop to do that? Or does that still feel a little like, are there still a couple pieces missing? And then maybe speaking of dynamic, like where does dynamic, if at all, fit into something like that?
Yeah, so I mean, it's 100% possible today. We actually made a demo video that I made using AI. So I used Cursor. It was actually pretty fun to like implement our own product and not being technical myself to be able to know enough to get it up and running, where you can connect the wallet, give that authorization so that you can charge the wallet in the future. And then the next step from that is the great thing about our tech is you can choose between what type of payment method you want to charge that customer. So if they want to take one ride with a credit card and the next ride with their crypto wallet, that should feel very seamless and sort of just happen totally on the back end. In terms of like where dynamic comes, so there are wallet providers. So anyone who connects their crypto wallet to one of our applications goes through the dynamic flow. So they're able to authenticate to prove that they own that wallet and then attach, the payment method again through dynamic.
It's really cool. And then the authentication in the sort of connective tissue is where Loop comes in between the merchant on the receiving end, the payment experience within the payer end, but the wallet infrastructure and balances and connectivity on the front end is, or from the wallet side, is coming in with dynamic.
Yeah, exactly. I mean,
really cool.
There are hundreds of wallets that any user could pay with, and dynamic does the hard work of making it so we just have one endpoint to deal with, opposed to having to integrate with every single wallet. And then on the Loop side, we do the work of making sure that that wallet pays you, the merchant, in a token that you want to accept on a network that you're willing to get paid on, without them messing up, right? They can't send you the wrong amount. They can't send it to the wrong address. Like we make sure that that experience is seamless.
Yeah. And the page that you guys are highlighted on this research report, it's talking about key use cases where stablecoins excel. There are 5 of them that are listed. I'm going to say all 5 of them, and then you tell me which ones spark interest in terms of, Loop specifically. So you have cross-border payments, real-time settlements, micropayments, tokenized access, and composability with other apps. When you think about those and the ideal customer profiles or the use cases that something like Loop enables, any kind of eyebrow raises for any of those specifically?
Yeah, I mean, definitely cross-border payments. The work that we had done for the report was we went back to our merchants and we asked them for data on uh, how many countries are they accepting payments from in just fiat, so outside of crypto, and then how many countries, well, we had the data of how many countries they were accepting payments in crypto. And what we saw is that merchants accepted payments from consumers in twice as many countries when they had enabled crypto. And there was, I believe it was 8.5% of their sales were from countries that they only accepted crypto. Like someone had only paid in crypto, someone hadn't paid in fiat at all. And I think the thing that folks tend to find a little surprising about the cross-border payment example is it is Western countries, like more developed countries as well. So our top 10 countries include like the Netherlands, Germany, Hong Kong, Brazil, Mexico. Um, it really runs the gamut. And I think merchants are seeing stablecoins as a way to go global from day one. I would say that the next thing is the real-time settlement. It relates to how merchants really care about cost. And if you're getting your funds faster, it means that you're able to operate the rest of your business faster, right? Time is money. And so that real-time settlement for both an FX question, right? If you're able to swap immediately into your native currency, then you've hedged that FX risk, but also from a liquidity perspective, right? If you're able to actually get the income and not have to wait 3 days to settle, I mean, that could mean the world for someone's business.
Yeah. Yeah. There's such an interesting stack here that's being developed with Loop. Obviously, my mind goes to like Arculus and Rain and the CoinFlow team and all of these really interesting payment, like stablecoin native payment layers that are helping this settlement, real-time settlement happen. How do you think about, in my mind, if I'm a merchant, right, like kind of going into this next phase, it would be so cool to have a balance or an ability to receive payments instantly, give my maybe team members on payroll, integrate Loop for stuff like that, give them cards where they can spend these stable coins. Like, have you thought how are you thinking about, I guess, the card related stuff? I know a lot of traditional PSPs, Square, PayPal, Clover, Fiserv, like these big payment companies often will roll out these kind of business cards or banking credit cards connected to those merchant acceptance accounts. Have you thought about that? And yeah, is that something
Yeah.
that we can think through?
I mean, we really think over the long term. And if you think about global payments, it's something like Visa and MasterCard do about $25 trillion, just these two payment methods every year. And Stripe does 1 trillion. So it's a
Wow.
massive market when you think of even massive companies that have such a small sliver. And so anything that gets the merchant or the consumer comfortable with this new payment method is a net positive in our opinion. And our view is over the long term, merchants and consumers will gravitate towards the cheapest option. And that journey may be going through how do you build trust with this new payment method. And so I think we've seen that play out where it started off with the stablecoin sandwich. I don't want to, I'm going to have the least amount of exposure to stablecoins and just go on and off. But we've seen that evolve into treasury management. How do I now hold a balance in a stablecoin because I'm comfortable with this new rail? And as part of like a merchant journey, right? I think for the consumer, there's something similar happening where, you maybe enter on an exchange, you just want to buy Bitcoin or ETH, and then you go and now you're more comfortable sending a friend a stable coin to, pay off a balance or as a remittance to your family in another country. And so our bet is that sort of the future will gravitate towards the lowest cost, easiest, fastest solution, and that is a crypto native payment, and that's what we're building for.
Yeah. How do you think about sort of a two-sided question? Like the payments industry is such a, at least historically, you think about Visa, MasterCard, PSPs, it's all about like taking a sliver when value is going from point A to point B. I send you money, like the payment company is going to take a little sliver. I believe that's sort of a part of the existing monetization of Loop. Like if what you're saying is true, which I believe it is as well, is like costs are going lower, payments are going lower. The cost of moving money around is becoming really reduced. How do you still think for the business, the main commercial center will live within that kind of processing feast type of world now with like so much margin to work with? Or are you thinking about other ways to introduce new revenue centers because stablecoins are involved? Like, how do you think about that? I know I'm like giving you probably venture capital trauma right now, but like, I'm wondering how you think about that.
Yeah, we think of the payment isn't the solution. We think of it as you win the right to do the payment. And from talking to merchants, what we found is the hard part isn't like having stablecoins show up in my wallet, right? Because I can just send you a stablecoin and it's there. The hard part is how do I have this new payment method fit in with everything else that I do, with my accounting, with my application that requires like webhooks and knowing that the customer paid, with the experience that I want to provide to that customer when they take a ride in, an Uber. And so our viewpoint is as long as we can build the tools around solving the operational challenges of a business, then we win the right to do the payment. And I think if you look at a lot of these payments companies, I mean, again, Stripe is like a great example. They started off as a pure payment processor, just, put this little widget and do a checkout. But what they built on top is all the other services that a merchant really needs to operate day to day. Things like being a merchant of record in other countries where they can accept payments, or calculating the usage-based costs of someone who maybe has like an AI SaaS product, or really helping with fraud and smart routing. And so these are just additional operational challenges that they're solving. And by solving those challenges, folks use their payment processing, right? And so we think of building a great payments company from a lot of the same purview. And our one value prop is not just the payment. And so the one way we'll monetize is not just the payment, because I do agree that margins tend to come down, and the way you survive there is by being able to offer additional services that others can't, because you're able to do that payment. And so we focused on, like, we have this integration with Stripe where you can do what I just described. You can sort of tack us into your Stripe account. It's, very simple. It's basically a click of a button, and then we become your crypto payment processor within Stripe. And that's because the size of the merchant who's willing to like embrace stablecoins today is a lot smaller than, like, we've yet to see a Spotify say like, yes, I'm going to have stablecoins, but we're building to sort of move in that direction to be able to serve a larger customer that, wants all these bespoke features and has like a much longer sales process than we would like, at this stage in our product development.
That's awesome. Cool. This was fun. It's always awesome to catch up with you on the state of things, what you're learning. I know I see you, Jeff, and the team just all over the place, just continuing to do the work and eat the glass and continue to grind in a productive direction. Any final thoughts as it relates to the research report, on-chain payments? Maybe a final thought here for those who are joining us on this session.
Yeah, I mean, I wouldn't be the CEO if I didn't plug our own products. So my
Gotta plug
final
it.
thought, would be if you're interested in stablecoins at all, we just talk to companies all the time who want to explore the space. And, especially for those larger companies, it is a journey to understanding, learning about stablecoins. And we're happy to be a resource, particularly for platforms. So I guess something we didn't plug is, we went live with a subscription management platform called OpenPay, and they serve a merchant, and so we serve the platform, where they allow any of their merchants to accept crypto alongside credit cards natively within their system. And so if you're a platform sort of similar to an OpenPay that is thinking about, well, how do we let our merchants enable crypto payments? Like, we would love to talk to you.
Interesting. So now you're going toward like empowering other PSPs or merchant platforms with this type of rail natively. That's really interesting.
Yeah, I mean, it's very similar to the going up the scale of the size company you're serving. It's like a platform wants to know that their merchants want it. So if you land merchants, you prove to the platform that merchants want it. And then it's just sort of a back and forth, right? You land merchants, platforms, merchants, platforms.
Yeah.
So,
all right. Well, Eleni, this was fun. Yeah, thanks again for the time. This was a fun session.
Yeah, thank you so much. It's nice to catch up.
All right, our next session, I'm so excited for this. We're joined by Christian Catalini of Lightspark. Christian, how are we doing today, man? Thanks for joining us.
Great. Excited to be here.
I was just reading through the manifesto on the Spark website, and I was getting, my engines were running. I'm getting fired up. I'm so excited to dive into Spark because, two of my favorite things are coming together here. You have Bitcoin and Lightning with stablecoins. For me, Bitcoin was really where this whole journey began many years ago. So excited to have you on and be a part of this live stream session with us. Why don't we start with your role at the company and maybe a high level of how you explain Spark to maybe folks who are just getting started with Bitcoin and stablecoins, how you might explain the company a little bit.
Yes, I'm one of the founders of Lightspark, and I lead strategy, which, it's something that really changes month by month, depending on what our top priorities are. Spark is something quite important and near and dear to our journey, a journey that, to be honest, started many, many years ago when we came together with David and a few others as the founding team of Libra. That project, incubated within Facebook, was trying to really release an open protocol for money. So for everyone to move value across the globe at a very low cost. We spent 4 years fighting regulators across the globe, trying to bring that to life. We were definitely early, and we miserably failed. But as part of that lesson, I think we saw not only the mistakes we made, but also kind of what the future should look like in this space. We went back to Bitcoin, which was kind of how many of us had entered crypto anyways. And we had a very strong conviction from there on that whatever the future of money will be, it will be built on Bitcoin. Now, the challenge for the first few years of Lightspark is that, as you know, Bitcoin is extremely difficult to build on. It's a bit like building for space. It's so limited. It's so constrained. So we started with Lightning, and we made Lightning eventually work. Today, more than 15% of Coinbase Bitcoin transactions are on our stack, which is something that I know our engineering team is really proud of. But Lightning can only really serve kind of custodial to custodial interactions. A large exchange, a neobank, a fintech, a large wallet. Of course, Bitcoin and stablecoins are a lot more than just custodial solutions. You need to be able to bridge Bitcoin to millions and then billions of people. You need to, go quickly and seamlessly between Bitcoin and stablecoins. They're different assets, they're different purposes, and they will play a different role, I think, over the next few years. So our CTO, was really bothered by these constraints and really wanted to turn Bitcoin into something that could meet and exceed what you see on other chains, from EVM to Solana. That really landed us on Spark. Spark is a solution that is stress minimized, and of course will get better over time, assuming, also there's also new opcodes. The flexibility of what you'll be able to do on Spark will greatly increase. But even today, you can essentially create a low-cost, non-custodial wallet with minimal friction anywhere on the globe. And that non-custodial wallet can hold Bitcoin in a way where they don't need to trust a third-party provider. And in fact, they have unilateral exit. At any moment in time, if they don't like Spark, they can go back to Bitcoin L1. We think it's a game changer. And the part that makes it even more exciting is that on Spark, you can have tokens. And of course, the first token to take a lot of attention is a stablecoin. Stablecoins have done a lot in payments and beyond. They've done a lot for democratizing access to financial services. And the intersection of Bitcoin and that, I think is going to be truly powerful.
So let's start with the anchoring of so much there, man. Your background is so interesting with just the relationship with David, the early Libra days. Like, there's so many amazing people who've come from that cohort of builders who are now just incredibly.
Yes, they're shaping crypto in many different companies.
It's sort of like the modern PayPal mafia in a way of like our current moment of like. Those who are really pushing forward like incredibly powerful and widely used on-chain use cases are a lot of folks who are like in that cohort of builders. Tell us a little bit about, maybe for those also who are newer to the space, like we hear things like Bitcoin is slower than EVM or things on Solana. Like, why is that? How does something like Lightning get involved here? I know this is kind of elementary. We're kind of going back to the macro, but help people think about this and why it's historically been kind of difficult to get something like stablecoins onto Bitcoin.
Yeah, so I mean, Bitcoin doesn't have the programmability and the flexibility of more advanced chains, right? It was designed to be that simple because its job is to be that neutral, universal form of neutral money that everyone can have access to. So that involves trade-offs, right? If you deeply care about decentralization and don't want to make the machine too risky and complex, you go for something that is kind of bare bones. We started on Lightning, and we were able to really scale it. Again, now 15% of the number of transactions, which is often like smaller transactions that happen between Coinbase customers and others on the network, are running on our stack because they're cheaper, they're faster, they're instantaneous. But Lightning works by essentially locking Bitcoin liquidity in pairwise channels. It's a little bit like correspondent banking, where, if you need to go from one bank to the other and they don't have a direct connection, you're routing through a network graph. So our first phase of Lightspark was really all driven by applying AI and ML through a product called Predict to make sure that we would ensure liquidity is always in place and you can have reliable payments on this essential Bitcoin network graph. We pushed that to its limit. But of course, if you're planning the next 10 years of Bitcoin, you want to make sure that anyone can hold Bitcoin in a non-custodial fashion, not just through a custodial provider, anywhere on the planet. And it should be as easy to get onboarded on Bitcoin as it is to, open a mobile wallet. The reality of Lightning is very far from that. And so we quickly realized that if we were only building on Lightning, we would hit a ceiling of where Bitcoin could go. Spark resolves all of those trade-offs and gives us something where essentially anyone can spin up a wallet. You can have a wallet that lives in your mobile app, is always available, and you can send and receive at practically no cost. So it's really frictionless Bitcoin money movement, and you can tokenize assets so that now not only you can move Bitcoin, but you can move stables on the same neutral and open infrastructure. As Spark grows, I think there's been a lot of excitement about bringing Bitcoin back. Many wonderful non-custodial wallets have dropped Bitcoin, right? Because sure, you can have Bitcoin, but every time you transact, you have to pay an L1 transaction, so it's very costly. But what we're seeing now is that everyone is coming back into Bitcoin. And it's not just meme coins and trading. And of course, there's going to be DEXs on top of Spark and more. All the obvious things that people have seen in the EVM and Solana ecosystem. But I think what's going to be truly unique about building on Bitcoin and DeFi on Bitcoin is that you have Bitcoin, right? So if this becomes the most important cryptocurrency and digital asset for the next decades, which I think many of us will agree it will, then it's obvious that from lending to other kind of higher primitives for financial services, they want to be as close to Bitcoin as possible. That's why we're building on top of Bitcoin. That's why we think Spark will really unlock developers to build all the kind of things they wanted to do. Something like as simple as Bitcoin rewards, right? Stablecoins today give you some form of yield. And of course, with the Genius Act, a lot of that will be changing. But why can't you get Bitcoin rewards? I mean, that's probably what many would want over a simple stablecoin reward.
If I'm a builder, if let's just say the capabilities of what's possible are equal between something on Bitcoin versus Ethereum versus Solana versus all of the other chains, like in your mind, what would the argument be to that builder, or the case that you would make to that builder to say, hey, like, look at this liquidity, look at the security, like what is that argument that you would make to them on why Spark, why Bitcoin?
I would say, imagine a world where as a developer, you can, with a few lines of code, move any tiny amount of Bitcoin at zero cost or almost zero cost. Now you can use that Bitcoin to design a loyalty reward scheme. You can use it to kind of trigger all sort of interesting behavior in your app. You can combine Bitcoin with stablecoins, so you can start thinking about collateralized lending and other things that will come into the ecosystem. Those were all things that in the past you had to do, to be honest, through a centralized intermediary, some form of wrapped Bitcoin, which of course is not Bitcoin. And so what we're quite looking forward to see on Spark is people coming back and seeing Bitcoin not just as something that you only use for very large transactions, but you can embed into every experience. To me, that's kind of a seismic shift. Just think about tipping. We saw a few days ago an application go live that allows users to tip other users on X using tiny amounts of Bitcoin. People don't love spending their Bitcoin, right? Because of course they're usually long Bitcoin, but there's all sort of things that you can do once people have a non-custodial pocket of Bitcoin in their app.
Yeah. Can you speak a little bit to security and liquidity? I know that's something that you guys, even in I believe David on his comments in the report here, we're speaking specifically to that piece of the game here in terms of the security and liquidity of the Bitcoin network versus others.
Yes, I think it's the liquidity piece is sort of obvious, right? If you look at institutional adoption, there's only one player in terms of network and asset that everyone is featuring. Whether it's the large, TradFi institutions or neobanks across the globe, everyone starts with Bitcoin. That means that it's the asset with the most liquidity. And often something that people don't think about is that because there's so much interest in Bitcoin as an investment asset, there's a really strong complementarity between Bitcoin, the investment asset, and Bitcoin as a payment vehicle. There's a lot of debate around the stablecoin sandwich, right? It's essentially moving money fiat to fiat using a stablecoin in the middle. As it turns out, for many global corridors, going from fiat to Bitcoin and then back is cheaper. You may wonder why. Well, first of all, there's a lot more liquidity in Bitcoin than, say, in USDC in many of these corridors. But second, there's a really nice complementarity between those two assets. So if I'm a market maker, I would love to onboard a wallet or a client that I know is going to do payments, and so it's not going to try to arbitrage me away and offer them better rates for those conversions than doing the same for a stablecoin. There's no arbitrage around the stablecoin by design, right? So the price will be narrowly close to parity.
It's really cool. So you started going into this a little bit, but I would love to understand more around, you mentioned this tipping use case on X, some of the market making use cases that you're seeing. Give us a little bit, if I were to think through the ideal business development conversations, partnership conversations, folks that are coming in and filling out the lead form that get you really excited. You're like looking through these companies. You're like, oh yeah, let's go talk to that one. Like, who are those types of companies right now for Spark? What are you seeing there? And maybe even if you can name maybe some launches or recent case studies or companies that model where you think the puck is going in terms of the customers you want to be serving.
Yeah, Leo, our GM for Spark, has a long list of conversations.
Shout out to Leo. We love
stages.
Leo.
Yes. To be honest, look, the ones we have already announced are some of the most exciting, and there's many more of that type, right? So Magic Eden, which of course always played a major role on Bitcoin, is really betting on Spark as part of their future trajectory. But then there's also these companies that, even if they're in the stablecoin space, they're really Bitcoin aligned. So if you think about Tether, and you saw we're going to be part of their wallet SDK, so that's kind of a major piece of the infrastructure. Tether is long Bitcoin and has been a very strong proponent of Bitcoin for many years. And so that overlay of stablecoins and Bitcoin and money movement on a truly open network, I think it's more important now than ever. Why? You're seeing every day a new proprietary or branded chain coming to life, right? So Circle with Arc, Stripe with Rumored Tempo. I'm kind of worried about some of that, right? Because in a sense, we may end up replicating the history of the internet, where we had beautiful, open, neutral protocols like TCP/IP, SMTP, and the like, and then we ended up building closed wallet gardens on top. If we allow stablecoin issuers to tie rails and asset, suddenly we're back into a different type of wallet garden. I mean, it's not the one of the card networks, it's not the one of some of the large fintech providers, it's just one by a stablecoin issuer. So we strongly believe in a world where the protocol, the network needs to stay neutral and open and interoperable. Bitcoin has a really good shot at being exactly that. And then you can have competition between many different issuers and different assets so that consumers and businesses really have choice. That's why, building on Bitcoin, even if it's, much harder than building on some of these more advanced networks. After all, with Libra, we built what was the state-of-the-art network, but it's not really about the technology, it's about the governance. If you can do that, and if you can really push a protocol that stays open and that people can access, and even competitors can agree on, right? So how do we get competing neobanks on the same stack? How do we get competing wallets on the same stack? One wallet will not want to be on the preferred chain of the competing wallet or the preferred PSP chain. So when you play it all out, and this really comes from the lessons of Libra, the only way to ensure neutrality, the only way to ensure that this will work out is to build on Bitcoin.
Something, if you're listening into this, go check out Christian's articles. He has so many amazing articles that he writes on Forbes. It's Forbes, correct, that you're publishing on? Really, really thoughtful pieces on what I find most enjoyable about your writing, Christian, is the way that you use lessons from history and lessons from the past of like other technological movements to help us think about this stuff. Maybe just on that, you mentioned this like early learnings from the early internet of these walled gardens or closed loops. What would be the equivalent here with, or the downside? Like what happened? Educates some of us on the downside of those like walled gardens in the internet. What happened there, or what sort of downsides did we see when that happened? And if, as we think through the parallel of the specific blockchains or ecosystems today that we're looking at here on the payment side, what are those parallels, and what uniquely should we be more critical of, in your opinion, or more, take more of a thoughtful approach with, or just be wary of as we try to innovate here? I think we're entering this really like gasoline on a fire moment of the industry, and there's like really a ton of excitement around it. I can get caught up in that personally, but it's also like having a measured, careful approach, looking at the past and not replicating disaster. Just speak a little bit to that, because I know you think that way really, really nicely.
Yeah, so look, I think history only rhymes, right? So it's not going to be a perfect analogy. But the reality is that I do think there's two major centralizing forces within crypto right now. One, it's the asset, right? Stablecoins solve a massive problem, which is volatility. But at the same time, they inevitably bring a big centralized intermediary in the picture. It's the one that manages the reserve. It's going to be regulated under the Genius Act. You have to trust that entity. That also gives them some power, especially in a world where there's not many stablecoins, but there's only a handful. So that power can later be translated by expanding to new products and services, which is kind of what we're seeing over the last few months, right? Whether you're launching your own payment network or your own network rules, that is not that different than a credit card scheme. So when you see that, at least for me, the alarm bells go on. The other one is about the rails. After all, when Satoshi wrote the white paper and eventually released Bitcoin, the whole idea was creating infrastructure for money that was truly open, right? And so if we end up in a world where, because we need to scale, because we need scaling solutions, we need more TPS, we need more functionality, we're kind of moving all the way up to layers where others have more influence, we may kind of kill the baby with the bathwater. What could that look like? It's something where, as large players scale, there's going to be all sort of incentives of staying within their L2 or their scaling solution or their L1, depending on the approach they take. They will start, favoring their own rails versus others. So you could imagine a stablecoin issuer like Circle with Arc suddenly changing the terms of how USDC behaves. And now quickly, they're going to be able to pick winners and losers. And that's exactly what crypto is meant to avoid. So that's the nightmare scenario, but I'm extremely optimistic because I think, first of all, it's too close to the ethos of why many of us, more than 10 years ago, got really excited about the technology. And in the end, if we protect interoperability, if we build technology that's modular and breaks through these silos, then I think the right outcome will win.
Yeah, it's awesome. As we round out here, speak a little bit, you said in the beginning, just the role of a wallet provider like Dynamic in this mission of a global, non-custodial infrastructure. How do you work with the team over at Dynamic, and specifically, where do they fit into the mix here?
I've been in touch with Itai over, many years as he's been evolving the work over at Dynamic. Look, modular, frictionless infrastructure that can onboard 1 billion people, it's going to be extremely important. And we strongly believe that with Spark, this is going to be an ecosystem effort. It's not just going to be Lightspark. Of course, we're going to be heavy on the R&D and try to push open source code that can really push us forward, but everyone has to play their part. And I think the work that's been done on the wallet infrastructure is going to be the biggest unlock. When you think about the gap between crypto today and crypto even in a few years, it's going to be really closing in on the experience that people expect on a fintech app. When you use one of our other products, UMA, on a neobank like Nubank to send money, say from Brazil to the US, it looks and feels like traditional fintech app. You don't even know that Bitcoin is involved. I think we need to get to that level of usability and seamlessness for people to suddenly kind of embrace crypto at scale. It's something that, is sometimes controversial in crypto because people, want you to go through all the rites of passage of setting up a hard non-custodial wallet, learning about keys. I still remember when we did the Bitcoin experiment at MIT, a good chunk of our MIT undergrads, which, on average, pretty smart, did all sort of terrible things with their private keys and tried to claim their $100 of Bitcoin. At the time, it was a third of a Bitcoin. So you can only imagine, that was a good investment on their side. Teams like Dynamic are really pushing the boundaries of how can we make it easy for people, understandable, simple to use, simple to recover. And as that happens, I think you'll see crypto everywhere. Maybe you won't see it because it will be hidden behind the scenes, but it'll be powering most of what you do when it touches money.
Yeah, some of us would argue that it's better to not see it. I'm probably in that camp for the most part. Well, this was great, man. Thank you for taking the time here. This is the last session, and we'll wrap the live stream event here. So thank you everyone for listening, and thank you for Dynamic again for putting this incredible stablecoin playbook together. So many incredible contributors here that came together to put their thoughts, efforts, insights into a single PDF, a single playbook for builders. It's 55 pages long. Go take a look at it over the weekend, grab your coffee and take the time with a highlighter if you can. And Christian, thank you, man. This was fun.
Thank you for the questions. It was really fun.
Awesome. Have a good one. Bye.